and welcome to my channel Wonders of Price Action. This is the series of the uh, monetary policies of central banks, 8 central banks. This is Bank of England, the policy that gave on the 14th December 2023. Bank rate maintained at 5.25% December 2023. Now they kept the rate same. Current bank rate 5.25%, next due on the 1st February 2024. Now let us dive into this policy and understand whether it is hawkish or dovish. Though interest rate remains the same, still there will be some clues, some will be defined here that will give us the Bank of England stance whether they are hawkish or they are. Monetary Policy Summary December 2023. The Bank of England's Monetary Policy Committee (MPC) sets monetary policy to meet the 2% inflation target and in a way that helps to sustain growth and employment. They want to bring the inflation at 2%, but sustain growth and employment. They don't want to that these two things suffer. With this condition, they want to bring the inflation at 2%. At its meeting ending on 13th December 2023, the MPC were voted by a majority of 6 to 3 to maintain bank rate at 5.25%. Three members preferred to increase bank rate by 0.25 percent points to 5.5%. In the MPC's November monetary policy report projections, conditions on market implied path of for bank rate that remained around 5.25% 5 until 2024 Q3 and then declined gradually to 4.25%. By the end of 2026, GDP was expected to be broadly flat in the first half of the forecast period, in part reflecting relatively weak potential supply and an increasing degree of economic slack was expected to emerge from the start of next year. In the most likely our model projection, CPI inflation returned to the 2% target by the end of 2025 and fell below the target thereafter. The committee continued to judge that the risk to its model inflation projection were skewed to the upside, such that the mean projection of CPI inflation was 2.2% and 1.9% at the 2 and 3 year horizons. Since since the MP's previous meeting, advanced economic growth, government bond yields have fallen in material, including a shorter horizons, and risky asset prices have risen. Global GDP growth has been a little stronger than projected in the November report. This is the comparisons of the November report with the this current. Consumer price inflation in the euro area and the United States has declined more quickly than expected. There remain upside risks to inflation given events in the Middle East, although oil and wholesale gas futures prices have fallen. UK GDP was flat in 2023 Q3 in line with the November report projection and the fell by 0.3% in October. Based on the latest official and survey data, bank staff expect GDP growth to be broadly flat in Q4 and over coming quarters. The committee continues to consider a wide range of data on developments in labor market activity. Employment growth is likely to have softened and there has been further evidence of some loosening in the labor market. Now means they are expecting the labor market to be to have the labors available. Relative to the assumptions in the November report, the fiscal measures in the autumn statement are provisionally estimated to increase the level of GDP by around 1 upon 4%, means 0.25% over coming years, as these measures will probably also boost potential supply to some extent. The implication for the committee output gap projection and hence inflationary pressure in the economy are likely to be similar. Annual private sector regular average weekly. Now these are the reports. I am still unable to get something. 12-month CPI inflation fell sharply from 6.7% in the September to 4.6% in October. That's CPI. What is it? Inflation fell. CPI inflation. Services price inflation declined to 6.64. This shows that the dovish GBP dovish GBP. Although such of the downside news relative to the November report reflected movements in components that may not provide a good signal of underlying trends in services prices of the persistence in headline. Now you may also consider, but I find out this just now in the last discussion on the sentences regarding the CPI. I find it dovish. Okay. Now CPI inflation is expected to remain near its current rate around the turn of the year, in particular services to increase potentially in January. Services price inflation is predicting in January. Related to the base effects from the unusually weak price movements at the start of the year, before starting to fall back gradually thereafter, the near-term path for CPI inflation is somewhat lower than projected in the November report, in part reflecting recent declines in energy prices. The MPC's remit is clear that the inflation target applies at all times, reflecting the primacy of price stability in the UK monetary policy framework. The framework recognizes that there will be occasions when inflation will depart from the target as a result of shocks and disturbances. What is this? The, f- the framework recognizes that there will be occasions when inflation will depart from the target as a result of shocks and disturbances. Monetary policy will ensure that CPI inflation returns to the 2% target sustainably in the medium term. Whatever the conditions become, we will try to focus on the 2% target. That means this shows the hawkish tone. Now, dovish and hawkish, it is revolving between both of them. Is it neutral? Since the MP's previous decision, CPI inflation has fallen back probably as expected. While there has been some downside news in the private sector, regular okay. However, the indicators of UK inflation persistence remain elevated. As anticipated, tighter monetary policies leading to a looser labor market and is weighing on activity in the real economy more generally. What does it mean? Given the significant increase in the bank rate since the start of this tightening cycle, the current monetary policy stance is restrictive. At this meeting, the committee voted to maintain bank rate. Okay. Now, what something we can find out here? As anticipated, tighter monetary policy is leading to looser labor market, and it means they are forced to keep the rate at 5.2. They don't want. Since the MPC's previous decision, CPI inflation has fallen back broadly as a, oh yes, it has fallen. Why have they kept the rate? Because the CPI inflation has fallen. Once one thing. Second thing, second thing, labor market issue and the economical issue. They are forced to keep. They want to increase. This is a hawkish instance. The MPC will continue to monitor closely indications of persistent inflationary pressures and resilience in the economy as a whole, including range measures of the underlying tightness of labor market conditions. Wage growth and services price inflation. Monetary policy will need to be sufficiently restrictive for sufficiently long to return inflation to the 2% target sustainably in the medium term, in line with the committee's remit. Now this is quite hawkish. Hawkish. They are hawkish. Okay, they are hawkish. Yes. The MPC will continue to monitor closely implications of persistent inflationary pressures and resilience in the economy as a whole, including a range of measures of the underlying tightness of labor market conditions, wage growth and services price inflation. Monetary policy will need to be sufficiently restrictive for sufficiently long to return to inflation to the target sustainably in the medium term, in line with the committee's remit. As illustrated by the November monetary policy proposition, the committee continues to judge that monetary policy is likely to need to be restricted for an extended period of time. Further tightening in monetary policy would be required if there were evidence of more persistent inflationary pressures. They are hawkish. DVP is hawkish. Bank of England is hawkish. Minutes of the monetary committee meeting ending on the 13th December. These are the minutes. And what was this that we were reading? That was the summary. All came in the summary. So I don't think that we need to further go in the detail, but the conclusion that I get from this here in the minutes, the immediate policy decisions are also discussed. Let us repeat them once here. Are we? How many minutes are there? They are in detail. So if you want other reports, these videos be longer, then I will also read those for you. I will read to you also these because if it's all on your interest, but what we were trying to make out whether this policy shows Bank of England stance, it is dovish or hawkish. Even if they kept the interest rate same, the policy is what is it? Though here it is not mentioned clear. When you will watch my video on the Bank of England, or you will go on their website and see their report on November or December, I have uploaded already. They have clearly mentioned they are restrictive. Here they have written on the actually on the top of the page. Okay, so the Reserve Bank of New Zealand is very hawkish, but still Bank of England is also hawkish, not dovish overall. What you make of this? Let me know in the comments. What is uh, your conclusion on this policy? Like my this video, subscribe my channel. Thanks for watching. Bye for now. I'll be coming in the next video with another analysis. Bye.